Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It's Friday. And I think we probably have a relatively interesting Friday set up here for us. Why are you scratching your head? Or is that like giving a salute? What is that? I can't tell what that smiley is doing. Well, just for starters, looking at the liquidity conditions, we're looking okay in the treasuries. So far for the first 15 minutes of trade or so, it's been relatively tight. Okay, it is a salute. Cool. All right. Coming over here into the treasuries. So, we kind of started the day over here in the treasuries on the down foot. We had the PPI news that was quickly swept off. And after that, not much happened until later in the session. We started to get some risk headlines. Donald Trump, on the warpath with trade and so forth again. And so the treasuries did move up significantly. By the way, that trade that we took yesterday not that we took, but that the robot took. Oh, we should come in here and make sure that we turn it on. How come I can't see? Oh, because that's only on the day. Oh, that sucks. I'd have to go and pull up the thing. Anyways, it got a really good winner on it. I posted it in the Discord. Where is it in the $3 Discord? Let me pull that up. Yeah. It got so effing lucky. Like, okay, it could have gotten one more tick, but oh my gosh. Because you imagine if it had gotten out down in here. Yeah, it got really lucky. Good. It was a good trade. For those of you wondering. Anyways. Oh, wait. It wasn't even showing that to you because it was on the wrong screen, huh? There you go. So it got in right here and it got out here. So it was pretty good. It worked out again. I don't think since we've started testing it this way, I don't think it's lost yet. Anyways. You can really see the story here in the S&P 500. Things just really turning down most of the day. So again, here, I would have thought that we would have had a recovery day somewhere in this week. And every time that it seems like maybe it'll happen, Donald Trump does something. But Donald Trump's doing something every day. So here's oil, just kind of middling, not anything too significant. Gold is the big story today. Because yesterday it was like, wow, gold is like really up there. And now this morning, over 3,000 for the first time. So that's a huge deal. Silver really moving as well. So just as I'll tell you this one now because I'm probably gonna forget, but the all-time high in silver is 50. And there's kind of this weird thing where between about 35 and 50, like, silver gets super crazy. And I think that there's a real possibility this time around, if there's another run in silver, that they will go beyond 50. Okay, so keep an eye on that one. Kappa, up with the other metals complex, but nothing too crazy. Japanese yen down a little bit, but the dollar continues to be weak. Bitcoin back and forth. Let's come back over here. I'm seeing some things that look very bad for the dollar in the short term. Like so improving trade, making, how would we put it? What is Donald Trump's goals here? Trying to get more free trade and improve the United States manufacturing base is something that, generally speaking, in the long term, should be good for the dollar. That should mean that a lot of money that is abroad is going to have to come back home and invest back home. But in the short term, it seems that what is happening is we are getting capital flight away from the United States. That because there's concerns about U.S. growth, and they kind of think that U.S. growth will be worse than European growth. You're seeing some of that money leave the U.S. and go over to Europe. Another thing that you're seeing is countries are saying, well, we would really like our money to be invested here in our country. There's kind of this patriotism, especially in Canada. They're saying, oh, we don't want our index funds to be all in the United States. We want them to buy more Canadian companies. And so that's also causing a lot of money to come out. So I am now starting to get into a place where when I see the dollar declining, it makes me concerned. It makes me concerned about the market conditions that are causing that. Granted, anything over 100 is still really high and probably too high, and we probably do want the dollar to be weakened, but not for those reasons, you know? So that, you know, like a Mar-a-Lago accord would be a good reason for the dollar to be falling, right? So that's basically where we're at. So I think that because we had some of that yesterday, we might have a little bit better of a session than we do on like a standard Friday. And I say this as a standard Friday, like we have the University of Michigan sentiment. So we do have a little bit of news, but not like a non-farms news, right? I was going to say one more thing before I address that, but I just totally forgot what I was talking about. Oh, yeah. Remember that the University of Michigan Consumer Expectations Sentiment, whatever report, has been the one where, like, Democrat sentiment is just absolutely in the pits and is showing numbers that make absolutely no sense and don't match the sentiment that you get from, like, the New York Fed numbers. So this number is going to be a widely watched number in the markets. Okay. All right. So Uzi says you should make the market order imbalance a candlestick instead of a line. I suppose we can do that. I'm trying to think of reasons why I shouldn't do that, but I think that I just don't want to do it because I'm lazy. Because it can be the case that it goes over and my indicator, or rather my strategy, will trigger and you can't see, you know, even though it didn't close over the line, because it runs every tick. Heavy option puts at 11 and 11.5. I do think it would probably complicate a couple of things, because then I would have to output the open, high, low, close data series for the caching instead of just the close. So I kind of don't like that. So I'm kind of like, well, that's added complexity in data. It's probably not a worth it change, but a retail trader will prefer the candlestick, and it'll look better. So that's probably an incentive enough to do it. I think I need to, let's see here, hold on. Yeah, over here. Indicator backlog. I know what I'm talking about. But you understand what I'm saying about like that. In terms of like actual utility to you, that the utility is pretty minimal, right? Because what's going through my head is kind of more of a like, somebody's saying that because they think that the candlesticks is going to give them some sort of an advantage, which I don't think that it would. Frankly, for the, well, now I guess one place where it would kind of matter is like if you were running it on really, really big candles, really high time frame candles, then I guess it would kind of make a difference, wouldn't it? I'm surprised that the robot is getting that big of an imbalance this early, but it's getting in there. I kind of like this one. Actually, this one is really interesting. So what I'm seeing here in the treasury this morning is that for some reason the cost basis is really close today. It's been super, like the spread in the cost basis has been really wide all week, and today it is not, and they've been going below. That kind of makes me wonder if there's an issue with the data, but then going back, it looks correct. Doesn't look like any obvious problems. So it's getting in right as it's coming back above that cost basis. So I kind of like that, in that, you know, we're likely, if we're going to have a retracement, it's got some room to go. Like the yesterday, kind of didn't like it because it was taking it like right at the cost basis line. Yeah, it would make it easier to see those spikes up and down on any time frame. That giant range candle is normal. Wait, which one? MBO bids are strong. Oh, that giant range candle is not normal. Yeah, I think that is when I opened it up. Yeah. No, it's not normal. This has been this weird thing that we've been getting, right? That's Tick Replay doing its thing. There's been some sort of weird data aberration that I've been getting from Rhythmic. And it seems to happen like when you open the chart. But when you look at cumulative delta looks fine. Right, so I think that these levels are okay. And I mean, do you have the cost basis in ZN at 25? I'd be surprised if yours was substantially different. Oh, right, you're now running the Tick Replay. Oh, it would be right, because you're having issues with this. Well, anyways. I think we're okay. Let's see what it does. The thing that I find so amusing about this algorithm is that it's doing something that's kind of dumb, to be honest with you. Like it is going after
a inefficiency slash signal that we found in the market, but it's basically doing it in the most naive way possible so that we can try and really see what the properties of that actually are. Specifically, we're trying to see if there is some sort of a cycle in terms of like how new the contract is. Right? So it holds for an hour. There's no kind of exit signal or anything. And I just find it incredibly interesting that it's working so well. It could just be luck. It's only been like, what, a week or two? But funny enough, it's been working well. And we should expect it to work well for another month or two. Until we get into so we're getting into May. Right? Now, with that said, since it got in, they're just kind of piddling around around 22, so. Now, all of that kind of brings me back to the conversation we were having at the end of the stream yesterday, because some of you guys were saying, oh, well, you should just stream all day the indicators and stuff. And the more I think about it, the more that I'm like, you know, I really don't think that there would be that wide of an audience that would be interested in them. Because the issue is that, you know, it's really technical stuff. And so when you're just looking at a chart, it's just a bunch of lines. It means nothing if you don't understand the market microstructure and other theory behind it. Yeah, that works for the bookmap thing because that chart looks so different from everybody from everything else that people see, rather. Octavia should stream MBO data. Well, like that. So that would be a good example, right? Like, I would be interested in seeing MBO data, right? Because we suspect that there might be some additional information to glean there that could be useful to us, right? But I think that the number of people out there that are interested in that data is it's just too niche. It's just too niche to really build a huge audience out of it. Now, if I could show order flow data on stocks, that would probably be a different thing, wouldn't it? So that's one way that we could approach it. And I have been thinking about doing that. Yeah, you're correct. You need to be here talking about the chart. Just having a 24-hour stream is not beneficial. Yeah, and like more broadly, and kind of where I was trying to go with this is, like, what is actually the most useful stuff for you? Like, there is what is the most likely to bring the views, but then there is what is the best for you. And the best for you is to be here and to be talking about the market and talking about the things that are going on in the market so that you can understand how those things lead to future orders and inform our trades. And then, you know, the second most useful thing would be the indicators. Right? So, I don't know. And then I do think that, like,
what should help the channel the most is videos. But for some reason, the videos just aren't really moving the needle. Well, the Treasury came back 2 or 3 ticks there, and when I look at all of the markets, they all kind of look like they are in a phase of consolidation. What you got here, Uzi? Oh, that's kind of a cool way of looking at it. Yeah. Showing you the whole queue and seeing the orders coming in there. Yeah. Tell you what, that's a lot of extra screen space, though. I mean, the thing that is funny about it, is that I'm not convinced that what you see there in that image is actually that much edge in it. Like, I think that the place where there's some edge in MBO is you can verify, you can calculate things like cumulative delta and so forth 100%, so that when you're doing things like backtesting and stuff like that, you don't have to deal with, there being a possible disconnect between like your historical and your live and all that sort of stuff, and the possibility to see stop orders being executed. I don't know if seeing that there's a big order in the queue, because when you look at it, there's like almost always a big order in the queue. I think it's kind of funny that when there's a lot of these things where it's like, okay, here's a piece of data that we can't see. Then we go and we get to the point where we can see it, and it's like, oh, it turns out that it's pretty randomly distributed. I suppose there might be something if you're seeing it go back and forth and you're only seeing big MBOs on one side, stack on one side, that might be a sign. Yeah, watching them move through the queue is kind of cool. Yeah, so I saw a TikTok yesterday in the phishing space that really resonated with me. This guy said that a lot of the time in the fishing industry, companies that make lures will design lures to lure in fishermen rather than fish. I was like, holy crap, that is exactly what happens in day trading. They build the tool to look cool and attractive to the day traders, even though there's not really any serious use for it. Like, it's not really going to significantly help your trading. Like with MBO, there particularly, Like, I just really don't think that it's worth paying $100 a month for that. On the algorithmic side, it's worth it. Or theoretically, it should be worth it. But kind of makes me wish that NinjaTrader had the right-click fix bar option that you get in some platforms like TradingView. Because it's really messing with the scaling of the chart, right? I'm just going to manually scale it there like that. Okay, cool. Oh, we made a higher high. That's cool. Volume, yeah, Delta, it looks good for like maybe there's a small meta order and we might be getting a second leg, but it's tepid. It's tepid. They're gonna break the high. By the way, another thing, I think we're gonna end the stream early today. Too long from 22. What? Where did the? Oh yeah, 22 is where the algo got it. Yeah, I think we're gonna end early because it snowed so much last night, and I'm gonna go ski. And the ski lifts open at 9. So I think what we're gonna do is we're gonna stick around until the. Well, first of all, make sure that this algorithm finishes and see the University of Michigan survey, and then probably we'll end the stream. Is that a... Oh, no, that is a skier. For some reason, that image at first looked like a goat. With my new table, my screens are a little bit further away than I would like. So, like, really small things are hard to see. That's why I'm often, when I've got the... When I'm trying to see tiny little numbers over here, I have to get a little closer. We're starting to notice an uptick of job seekers actually showing up to interviews that are... Oh, that's interesting. So you're saying that most of the time when you're interviewing, people don't show up, and now more people are starting to show up. That doesn't surprise me. Man, the jobs stuff is so... It's just... I've never seen a situation like this where you can have a really, really bad situation in the market. And all of the top line numbers hide that reality. When things are good, people don't show up. When things get rough, they do. Like it's been, they're calling it the Great Freeze. They're calling it the Great Freeze. So what's happening is hiring has declined overall, largely because, you know, there was like a lot. Interest rates have been so high. Interest rates have been so high that, you know, companies really stopped hiring and really started implementing more cost-cutting measures because they've been running in growth mode for like 20 years, and now all of a sudden they have to cut costs, and they don't really know how to do it. You know, they have been, the executives and all of those kinds of people have been trained by a low interest rate free money market to just be pedal to the metal, expand as aggressively as we can, care primarily about what the stock market is doing, all of that sort of thing. And when you're in a market decline, that's where I think that the real differentiator in the market comes along. And, you know, if you're a company and you do cost-cutting measures that are ineffective, it's really going to hurt you when you're coming back out of it, right? But because they aren't really hiring a whole lot, what is now happening is people are staying at their jobs. Like if you have a toxic job, you don't quit and go and find something else. Maybe you're interviewing somewhere else, but you're not finding a position. Right? It's the great freeze. Like quits has fallen off a cliff. Like hires has been slow. Quits have fallen off a cliff. So what it means is that like the velocity, that is like the amount of people, you know, moving through roles, maybe getting laid off and then coming back into the market in a different role, is really, really bad. It's really, really bad. And I believe that that is a recipe for a recession. That's a jobs market that would not require very much to push over the edge, you know? As things get worse, rich people still want their houses cleaned, so work stays steady. People who want to do the work we do depends on how bad things are. Yes, but here's a question. Is the business or do you have as many clients as you did before the recession, before COVID? Because my theory would be that you'd be seeing, you know, like slow and steady growth, and then in COVID it like go up crazy, and then it's kind of coming back down, and it maybe is actually slightly less than the longer run. Because the thing is that in a recession, the white collar jobs tend to be relatively safe. Oh, it's like that, but COVID didn't cause the spike up. The spike up happened between 2009 and 2012. COVID caused a massive spike down. Oh. So was it like COVID caused a massive spike down and now we're kind of not quite as high as we were? Yes. And the reason why I'm guessing that, and my theory why, is because your clients are going to be white collar workers and the job market is not as good for white collar workers. And you can't see it in the headline numbers because we're talking about like 5 to 10% of the overall workforce. So like a really, really bad situation in the white collar workers doesn't really affect the top line numbers very well. And you're seeing a lot of migrant labor and jobs being made in other sectors and in services sectors that make up for it at the headline numbers. When you're hiring only women, there's variables there, like when they were fronting out child tax credits interviews. Oh, that's very interesting that you were able to see that. So I had a thought about this sort of thing the other day. I don't know, I guess we can talk about this sort of thing on Friday. Because I think one of the complaints that you see around is that, in terms of gender issues in the workforce, is that women didn't work before, and that meant that the labor pool was a lot smaller. And so companies had to pay more, relatively speaking. And so from women going into the labor force, it really didn't help middle class households out at all, because now it just requires two parents to be working in order to support a household. like a double income, it becomes like a minimum requirement to live a middle class lifestyle. So you didn't help yourself at all, right? But something that I find really, really interesting is that in humans, when like in most animals, when you stop reproducing, the animal dies. It's not needed anymore. But in humans, women have a huge portion of their life after being fertile. It's not something you see in other animals. So it seems to me that what it really should be is we should be putting more effort into creating a good job market for those women coming back into the workforce when they're older. That we're not, that there's a lot of value that could be found from, women that are in their 30s and 40s coming, that haven't worked for like 12 years coming back into the market, And in the current market, a woman that's been out of the market for that long, it's really hard. There are some companies like Goldman Sachs, they have this whole return ship thing that's really, really cool. But most companies are like, you would have to have a certain amount of experience unless we're hiring you right out of school. And that seems to me like a problem in our labor force that we need to fix. Let's see here. Native working class people are different from migrant labor. If native labor can get food stamps, Medicaid, or small windfalls like tax refunds or credits, they bail on jobs. Migrant labor doesn't do that. They all take a medium wage all day. Uzi, I need a new girlfriend. If you find a non-entitled girl that is willing to clean is a home run, let me know. Gosh, dude. I wouldn't mind a... You know what I actually need, though, is I need a babysitter. Is just having one of us, whether it's me or my wife, watch the kids all day is too much for one person. It shouldn't be like that. Like I kind of do wonder about this thing about like it takes a village to raise a child sort of a thing. That like maybe we were not meant to, one parent raise the children all on their own. That they're supposed to have grandma with them, right? But with my autistic child, it is so draining. I'm so burnt out at the end of the day. Or when I'm really having problems with him. I need a babysitter. I need a professional, what do we call these? A professional nanny that specializes in autistic children is what I need. Okay, anyways, not men, but women, working class women, always looking for ways to bail on work. Employee be telling you about her new boyfriend one day and quits the following week because he's a mechanic or a contractor, makes better money than she did. Yeah. dump the kids at the White House and they can hang out with Trump. You know, do you know that Donald Trump has always, it's like one of the big things, like unique things about him in his approach, that he always involved his children significantly in his work. And I kind of think that Elon Musk has been doing it because of Donald Trump. That the old business associates said that his kids were always in his office. And like he's doing that intentionally so that they pick up the business. And he always said that he was a better father than he was a husband. Like he really even though he's cheated, like we know he cheats on his wife, or has. I mean, I don't know what's the deal is with Melania while he's president, but we know that that before that he was even like leaking that he was, because he thought it made him look good. But he's always been super focused on his kids. Having this business is kind of what made me resent the strong single mother stereotype. Single mothers will dip on whatever income they have for the smallest of windfalls, and even the slightest hiccup is an absolute tragedy for them. I ain't kidding when I said if people quit their jobs over having a flat tire one morning. Wow. Okay. That's weird. I don't know. You're saying something kind of a little bit dangerous though. You're kind of saying that like most single mothers aren't really very good mothers. I can just tell like the big thing I see is that the hormones that drive men and women are very different. Hormones that drive men and women are very different, and there's a substantial body of evidence to suggest that children need both. I would never. Well, so I think you got to clarify what's a single mother. Like a woman who had a child out of wedlock in their 20s and it didn't work out with baby daddy or something like that. I don't think I would ever date a woman like that either. But a woman that, you know, they had kids, you know, the kids are, you know, been around for several years, and then they had a divorce. That's different. And that's going to happen to a pretty large portion of the populace now. So if you're filtering those out, then you're probably filtering out some of the best matches. It was a single woman with kids, too much drama. Yeah. And it also depends on your age, right? So when you get into your 30s and 40s, like a woman that hasn't had kids, that's in her 30s and 40s, it's like, what are they doing with their life, right? They're either a loser or they're too focused on their business, and each have possible negative implications for your relationship. But I guess it depends on what you're like. If you're a person that has no interest in having kids, then maybe that's not a problem, right? It's not that strong single mothers aren't a thing. It's just not a typical thing. Yeah, no, I get what you're saying. But even just to say that on average, single mothers aren't strong is a pretty controversial thing to say, right? Like, even though like wokeness has been canceled, I still think I could get canceled for endorsing that view. and I don't endorse that view. I don't know if I would think that single mothers would probably be on average no different from Maybe it's different depending on income levels, like middle class and upper class single mothers are more. Yeah, that's probably true too. Yeah, I should probably put this over on the fan real quick. Hold on, I'll be right back. I guess the thing though is that like the traditional nuclear family conception where the wife stays home with the children all day and dad doesn't get home until 5 or 6 o'clock and is then exhausted and just sits in the chair and watches TV all night is pretty unhealthy as well, as far as I can tell. Like I do think in an ideal setting that children will probably spend more time with mother, but dad should be around quite a bit, and they need to have a large amount of interaction with both and with grandma and grandpa as well. And that seems to be what's like best for development. So maybe this is part of why I kind of like this conception of that perhaps AI, if we really are approaching a singularity, and I kind of think that we are in some respect, that one of the economic consequences of the singularity would probably be that people do get more free time, that you wouldn't have, your work would be so productive that you wouldn't have to do a lot of work to have money. That you would, like, a lot of work would become contracting jobs. And that it would only be there'd be a smaller percentage of the population that is truly working full time. Mostly because they're the people that are really driven to really be, like those men that put everything into their work and try to climb the corporate ladder as much as right. Those people will still work full time. But I think that most other people will find that they maybe have to work just a small period of the year, and that pays for their whole year. And that you might start to see a lot of people do that. And then there would be more time where both parents are home. You know what I mean? It's weird how culturally we're so adverse to acknowledging negative character traits of people we see as disadvantaged. Well, I think that the reason is because there's a chicken and egg problem there, right? Because liberals in particular seem to have this idea that anybody that is disadvantaged because society has put them at a disadvantage. And Republicans overall tend to have this idea that anybody that's disadvantaged is disadvantaged because they made poor choices. So like when it comes to single mothers in particular, they're going to say, well, you shouldn't have had sex outside of marriage. Shouldn't have, you made bad choices. And a person that that made bad choices on that is going to make bad choices on other things, right? But there is a strong component there of like that the reason that they had sex out of wedlock and that they didn't get married or they made these other mistakes was because they were poor and not because they make bad decisions. You know, like I don't think that you can separate them like that. So it is kind of like well, it's not is kind of, I think it's improper to like victim blame there like that, right? To say, well, you deserve it. You deserve it because of your bad choices. You know? Yeah. But when you're standing behind someone's paycheck, paying them more than enough money to say buy a car, they never do. They always have weed. How do you just ignore stuff like that? Well, okay, so like here's where this comes from though. Like I think here's okay. So here's my approach. Here's how I would approach this if I was in your situation. Okay. Let me segue to something different. Just because this is something that I've thought about in my mind, like a monologue I've thought about in my mind, but it starts from a completely different place. So I saw this. There's this subreddit that for some reason Reddit is starting to show me called Gifted. I don't really think that I am gifted, so I don't know why Reddit is showing that to me. I think that I'm neurodivergent. I think that I have modes of thinking that are different from other people. And I've had many people tell me that I'm intelligent, but I don't think that I would score like a 130 on an IQ test or something like that, right? But it was showing up there, and they were asking, do people with high IQ reason better overall? And I don't think that they actually do. And which doesn't make sense, right? They should reason better, like that's what IQ is all about, right? Well, the issue is that why do we reason? And from what I can see, reasoning is primarily used by people to justify what they're doing, which is to say, we already decide what we're going to do. We already decide what we believe, and reasoning and logic is all just the negotiating it with yourself afterwards to try and justify what you did, even if it makes absolutely zero logical sense. And so this is why the different methods that we might use to try and change somebody's behavior, like trying to use logic and reason with them, like pleading with them or trying to shame them into changing, tend to be ineffective. Because at its heart, people are really just doing things that match in with their beliefs. Right? Especially when you own a small business, your employees will have the tendency to think you're rich without knowing your paychecks are often comparable to theirs. I thought your house would be bigger. No, yeah. So what it really comes down to is that they will tend to have fundamental beliefs about the world that, you know, line up with putting them into those bad decisions over and over again, essentially. So if you want to change that, you have to change their fundamental beliefs. You kind of have to somehow show them, because ultimately everybody wants to be a good person, right? But you know, a lot of people that are poor in particular kind of think that it's futile. So that's, you know, they do those things. It's like, well, This doesn't matter because I'm not deserving of wealth, or I'm not capable of generating wealth, or whatever the deal is. So I should just have as much fun as I can now. And then they make those kinds of decisions. And that is where I personally, I think that I adopt more often than not more the liberal side of the argument, because I think in that respect, that is where these people become victims, because they have grown up in a culture that gives them beliefs that lead to failure. You see, people get into situations you'd overcome with almost no effort, even if it requires no money to overcome. And you don't relate to how they just cannot do it. Yeah. Okay. Donald Trump is tweeting right now about, so I didn't cover this. I keep forgetting about the whole debt ceiling thing for some reason, but I'm just so much less focused on politics these days for some reason. It was a big shock yesterday that Chuck Schumer was basically going to, that Democrats weren't going to pass the continuing resolution, which is basically just keeps spending at the levels that they've been. Supposedly. Democrats are like, this is unacceptable. And then yesterday, Chuck Schumer went back on that and said, actually, they are going to vote for cloture. So I don't know what happened there. It kind of seems to me that Democrats thought that, you know, they didn't want to shut the government down, but they wanted their constituents to think that they were fighting. So they kind of did this thing to kind of make it seem like that they were putting up a fight, but they didn't do a very good job of it. And so it just kind of looks like the next day they flip. I don't know. It's kind of a weird thing. Strong bids. Well, the Treasury is pushing up there to new highs. I'm noticing that there was a pretty strong impulse in the 5-year in particular, but all across the board, they're all buying right now. I am actually seeing a bit of steepening as well. So those are some signs that like the flight to safety bid is coming in, but the S&P 500 is just barely starting out the day. So now this is another thing that kind of frustrates me though, is that like, what you do really does have a great deal to do with like your fundamental beliefs about certain things. But people get into this whole manifesting thing, right? That's where it's like, okay, when you have one of those beliefs that are counterproductive to your success, then you kind of have to tell yourself, I believe this, until you really internalize it and start to act in accordance with that belief. And so that is really kind of the underlying mechanism that this whole like manifesting kind of ideal and philosophy comes from. But people saw it and they thought it was a mystical thing that, you know, because of the quantum realm and whatnot, your thoughts and desires are actually affecting what actually happens on some sort of quantum spiritual level. And so if you just manifest hard enough, the things will just happen and all of these sorts of things. And then it's like, okay, so if you're having trouble being a successful day trader, then it just means that you're not manifesting it hard enough and you need to try harder to manifest it. No, because it doesn't matter how strongly you believe in something, or it doesn't change the reality of the world. Manifesting is completely about modifying your behavior into a mode of behavior that's more likely to lead to success. Somebody hit those strong bids? I don't know. I kind of feel like that we fell through that pretty easily. That kind in the 10-year, it kind of looked like the bids just kind of pulled out of the way. I'm hearing Russian headlines too. But, you know, like the S&P 500 has kind of turned up a little bit there. So it does still look to me like it is moving based on correlations. So I don't think that we can really make too much of these moves yet. I do kind of wonder, well... Yeah, I do kind of wonder how much selling there was in the treasuries overall in the week, that today there might just be kind of like buying to close positions out. So we got that flow going in here, and we've got the flow with the dollar and the S&P 500 on risk off stuff. And then we've got the flow with people potentially hedging for the consumer sentiment. So I think that all for now kind of should lead to a market that's relatively tight still. So I think that after what was a good run, shouldn't surprise us to see it come back 2 ticks. I wouldn't read too much into that. Now, on the other hand, this over here in ZB does look unusual, doesn't it? Like the ZB was on a pretty strong move, and then you got a pretty big sell and a pretty big buy. So it also looks like that there may have been a collision where a large buyer and a large seller both kind of transacted there at the top a little bit. So it wasn't there at 24 very long, and that's traded 16,000 and 19,000 contracts. I think that it would have had to have been a collision for it to be that much volume. See, the way that this is played out in the 5-year is interesting. Right? Because it did this. There's a bunch of volatility. It spiked up even bigger. I can remember seeing this in ZB a lot. And haven't seen it in a very, very long time. Like, this was like before I started streaming, this was a pattern that I would see. And it would always make me think that I knew what was going to happen and it would resolve in a confusing way. Okay, like the 5-year is falling out, so if that's the ringleader, that drop there might be interesting. So now the algorithm, it's only got one tick, and when did it get in at? 6:45. So it's only got a few minutes here before it's gonna exit. Let's hope that it gets a good price. Yesterday it got super lucky, so. But it seems that so far the S&P 500 is turning bullish, and that the treasuries are struggling because of that now.
Order filled.
Okay. So it made one tick. Oh no, actually the backtester says, well, not the backtester, but this thing says that it got out at the exact same price. So it just lost the commissions is what it says. That one is a pretty iffy one, because it was kind of moving around there. So this is where it comes back to this thing that's like in back testing, like, oh my gosh, one tick makes a huge difference if it's one tick on every trade, right? Like if you're losing one tick on every trade and there's 10,000 trades in it, like that's, you know, $15,000. Did I say 10,000 or 1,000? You know, if it's $15 a tick, You're losing that over 1,000 trades. That's $15,000 you lose. And then you're going and you're looking at a back test where it's like, you know, the net profit on it is maybe like 30. That's like really actually only 2 ticks average per trade. So losing 1 tick is really significant, isn't it? And I've not done any work on any of my algorithms to, you know, really try and get that 1 extra tick, because I know that the back tester's not going to be very effective in those situations. But maybe we can find some things to work out and make that work. I do kind of wonder if we have a situation like with this one right here. So we got in. We got in when cumulative delta was spiking here, right? It came back and then it went up again. And so I'm kind of wondering if in that situation, if you get a second spike, that's a good place to just exit. That might be one strategy. Conversely, if it goes all the way back to the other side, that's probably like a stop out. It should like exit and flip around the other way in that situation. I haven't seen it do that once yet. What? Sorry, hold on. I was looking at something you know, you don't need to worry about, but I just saw something that really confused me, and I'm gonna take a look at here, try and figure out what's going on. It's not a bad thing. Oh, I see. Oh, that's good. Okay. Cool. Oh, I see. Yeah, 10 minutes to the top of the hour. Thank you for reminding me. Gotcha. Okay. Call the DOM after the number and make a video of what you see. You're basically saying let's try and make a short out of the release. I feel like the best way to play it is to already have a position on and then be like, see how amazing I was. I kind of suspect that the way that this one, I mean, if this plays out the way that it's been, then the play is to sell it, but. Interesting, the treasuries are coming back up there now. So I think yesterday the algorithm got super lucky on the exit, and today it got super unlucky on the exit. Like, that was really the worst exit it could have gotten. And again, remember, its exit is based entirely on time. If you can do something like, I shouldn't talk about this. Let's focus on the news here. Here we go. So I'm focused primarily on the 1-year inflation preliminary, previous reading 4.3, expected 4.3. There's the pull in the liquidity, but we are kind of at the higher end of the range here. Here it goes. A little bit of a trickle of volume coming in here. It is a sell. I can see 1 year 4.9 versus 4.3. Sentiment low as well, 57.9 versus 63. So I'm curious, in this situation, I think that the sentiment matters more. The sentiment being kind of low suggests something that could create a recession, but the higher inflation expectations suggests, more inflation and ergo treasuries would sell. So those two things suggest the opposite. But the expectations, I think, are way, way super out of whack and based primarily on partisan sentiment. So I think that you kind of ignore the inflation expectations and trade primarily off of the sentiment. Perhaps why the treasuries are moving up slightly, but it's still too early to call. We've seen a little bit of volume coming out both ways. Yeah, I was about to say whose expectations. Yeah, the survey actually shows you the sentiment Republicans versus Democrats, because it's always historically been the case that people have higher sentiment when their party is in power. And the sentiment of Democrats they really are convinced this time that Donald Trump is going to create a recession. But the problem is that that Donald Trump will create inflation, rather, in this situation. Not a recession, but inflation. Yeah. Democrats are really, really convinced that Donald Trump is going to create inflation from tariffs. But the inflation expectation number that survey is coming out with are just absolutely ridiculous. Like a almost 5% 1 year inflation is insane. And the other surveys aren't reflecting that either. So I think that it's kind of an aberration of the methodology of this particular survey. And I think that the sentiment, the 57.9 versus the expected 63, that's a more important piece of information. And that's something that is kind of suggests deflation. That's something that kind of suggests that people are going to buy less stuff and could lead to a recession, right? Okay, well, now the selling seems like it's taking hold. Kind of interesting. So you're getting treasuries and equity indexes selling. I don't know, man. I don't know if this makes a good video. Does this make a good video? Look at that massive offer stacked at 20. Okay, they kind of test it, I guess. 3,000 goes bid. We should recenter on that price, probably. I don't know why I was thinking about this, but I guess I'll talk about it anyways. I was thinking, like I have my indicator suite, and there are some tools that are really essential to my discretionary trading, like the synthetic dollar index, the spreads, and I think inventory cost basis is up there as well. And then I have a bunch of other indicators that I'm not necessarily actively using every day per se, but are more like I'm collecting data and maybe I'm going to make an algorithm out of them, right? And so I'm kind of wondering, like, would you get more sales if you split them up? If you said, okay, here's the algo pack and here's the discretionary pack. Something like that. Because I'm kind of getting some signs that we're getting a liquidity hole at 20. But there's already a lot that's traded there, so. So what I was going to say before the news was I was wondering if you can do something like, okay, I get into a position right here, and then so like it's going up, and I get into a position, and then it kind of comes back and does that, right? And can I say, and let's say that this is an hour right here, right? So then it comes back, and that's kind of basically what happened, right? So holding it for an hour, it's supposed to be random. And you can see here's a situation where it really kind of hurts it. Like, you could have gotten so much of a better price. So I'm wondering if what I can do instead is I can say, okay, like, you have to wait a certain amount. Like, I'm going to wait 20 minutes. I'm going to wait 20 minutes. But then after the 20 minutes, the next time that I'm getting an impulse up, like that I'm maybe I could say I'm breaking highs or something like that. Then I exit. And so I end up exiting there. So it's like wait a period of time and then wait for a break. And you could even do it timed on the break too. You could say like, okay, if we had a break of high, then wait 5 minutes. And then if it breaks again, I wait 5 minutes. And if it breaks again, I wait 5 minutes or something like that. Or is it that when I get a break of a high, I wait for it to do a pullback? So I like the idea of waiting for it to do a pullback because I think that's what I do a lot of the time. But how do you define a pullback in this instance? What would be the most effective way to do that? I don't think that I have a very good... I don't think that I have very good ways of doing that, defining that. Well, I think that's probably thinking through it too much. I think that to start, we need to have something that's like, you know, put a limit order in and wait a certain amount. And if it starts moving away from us, then I just mark it in. Something like that? I don't know. Well, I don't think, let's see here. I like how Trump signs executive orders is actually on the, yeah, it is. That he's going to be doing that later today. I'm telling you what, man, they have like a whole, I don't know how long of a plan it is. Maybe 6 months to a year plan of like actions and executive orders to keep the media cycle going for them. Do a 3 lot and pull a leg off at 3 and 1 at 5. Yeah, you know what, Octavius, like we can do that, but I'm really primarily interested right now in something that would be applicable to one contract, because then that is something that when we are using multiple contracts, it can still use that, right? But what I'm looking for is, okay, like I come in here and I look at the bid and the offer. Oh, this is what I do. What I need to do actually is I need to look at the book and say, okay, what is bigger, the bid or the offer? So if I'm looking to buy and, you know, like in this situation, I should be buying at 22, right? No reason to buy at 22 half because I should get filled at 22. So I probably can make the algorithm do that. But then what should the algorithm do in this situation where it puts the order there and it doesn't get filled, right? There should be like a certain amount of time that has gone by where it's like, there should have been enough volume to fill you. So if it hasn't, then we should cancel the trade, right? Or instead of canceling the trade, do you just at that point convert into a market order? And if you're going to convert into a market order, you don't want to do it at like, okay, so we were at 22. It's already changed a couple of ticks, right? Do I want to chase it all the way up to 24? I don't. In this situation, I don't think so. But right, this is the sort of thing that I'm talking about. Is basically a way of managing whether the algorithm uses a market order or a limit order and adjusts its limit orders. Right. Once I've got that down, because basically what I would do then is I would say it would be the same exit. It would be wait an hour, but just use some information that you know about the book to decide which price you know, to try and get an extra tick out of it, right? Okay. Then I can start worrying about some of these other things that I was talking about, where it's like, can I engineer a better exit by like waiting a certain period of time and then getting out on the next up impulse? So I think like the best way of doing this would be like, I got a trigger in, it comes all the way back to 50, it stays above 50, and then I get another impulse that would have like triggered an entry, right? Well, it might not always come back to 50. So I would need to have some better way of saying, like, basically rearm needs to come back a certain amount before it rearms, but then you have this issue. So then we could do another test, which would be like, do when you get a second impulse, get out, versus when you get a second impulse, extend your exit another hour. Which of those two works better? Is it better to you get in and you just get one leg, to just take that one leg, or is it better to really try and hold it for, like, say, a trend day? Those are the things that we can start to test. And we can also start to test things like adjust what you do based on where we are relative to the inventory cost basis. Like in today's situation, I think the way that you would want to play this, so it got long at around 6:45. So it got in somewhere around here. Is that right? Yes. In fact, it was exactly. So it got in somewhere around here. Actually, you know what I should be able to do is just data series plot markers only. Yeah, there it is. Okay. So got in right there. What was I saying? You hold it, you're assuming there will be a third leg of a meta order. Yeah. Oh yeah, the cost basis. So in this case, it was getting in pretty close to the stop out zone for buy, right? So ideally, I would be taking it off when I hit the cost basis, right? So we could say something to the effect of, if it's a buy and my entry is below the sell cost basis, then I want to take my profit one tick below the sell cost basis. Something like that. And then today it would have, well, I mean, I don't know, man. I'm really starting to be like, I don't know what else I can do about it. Like it's so accurate, man. Every freaking time they bounce there. It's complicated, but it really seems like the most prudent thing is to just one tick below that. What you got for me here, Uzi? Geiger Capital. Yeah, the University of Michigan inflation survey is now complete political garbage. Democrats expect huge inflation, 6.5%, and Republicans expect no inflation. Yeah. Oh, that's really bad because it's both sides are seeing. Well, you know what, though? First of all, when you look at the price of eggs is now lower than it was when Trump started his term. Like on all of the metrics, you're seeing all of these things move in the right direction. I think it's kind of funny because, like, especially for eggs, that has nothing to do with Donald Trump, right? That was all stuff that happened before he got in office and trying to make a big deal. I saw people, like, literally from the day that he was in there trying to pin it on him. You've been in office one day, but now you're responsible for the price of eggs, right? And really, they're harming themselves in the long run, because now all you've done is you've given Donald Trump an excuse to make a big deal out of it and make it this huge accomplishment when they inevitably come down. Because it is, I mean, the price of eggs is going to come down. It is just a temporary supply issue. Kind of surprised that they don't offer egg futures at this point. Yeah, that's funny. Anyways, yeah, like I said, this survey's messed up because Republicans shouldn't be expecting 0, but Democrats shouldn't be expecting 6.5. It should be around, what was the one earlier in the week? This week. It was this week, wasn't it? Maybe it was last week. Maybe it's not on this one. $3.1. %. I think that this Fed survey is correct, and that, so let's come in. I bet you Zero Hedge will say, I bet you I know what Zero Hedge is going to say about it. Panicking Democrats send Mitch inflation expectations to highest in 32 years. Inflation expectations exploded higher in preliminary March data, with medium-term views spiking to 3.9%, the highest since 1993. There's just one thing. It's all Democrats. Republicans expect very little inflation over the next 5 years, but Democrats expect a surge to 4.6%. Short-term expectations are even more divided, with Democrats expecting inflation to explode to 6.5% this year, while Republicans expect no inflation. Overall, consumer sentiment declined significantly. While current economic conditions were little changed, expectations for future deteriorated across multiple facets of the economy, including personal finances, labor markets, inflation, business conditions, and stock markets. Many consumers cited the high level of uncertainty around policy and other economic factors. Frequent gyrations in economic policies make it difficult for consumers to plan for the future, regardless of one's policy preferences. But once again, it was all Democrats who are now convinced that the U.S. outlook has never been worse. According to Democrats, this is the apocalypse, folks. Not really. Democrat expectations for the economy have never been lower, including the global financial crisis and COVID. For Democrats, this is the 10th circle of hell. Wow, that is bad. What's more, Democrats are boycotting spending to prop up Trump's economy and instead are sitting on cash, which, according to them, will be worth 6.5% less in 1 year as a result of runaway inflation. It was, okay, they didn't say what I thought they were going to say, which was that they were going to compare this survey to the New York Fed survey. Because if you look historically, they tend to follow each other pretty well until recently. So, good grief. But that thing that they just pointed out there at the end is really funny, which is that what they're doing here, like it's contradictory. You can't have like a recession and inflation. It's not going to happen that way, because if you have an inflation, that kills all demand and prices come back. Stagflation is low growth, high interest rates. High inflation, high interest rates, low growth. I'm not sure that you can have high inflation, negative growth, at least not for very long. So they kind of have a good point here, which is like, if you're really expecting inflation, then shouldn't you be doing things to protect your money against inflation? And if you're really expecting a recession, then shouldn't you be doing things to protect yourself against a recession? But these are kind of two contradictory things. I'm kind of concerned, though, that Democrats pulling back on spending could lead to a recession. You could get like a recession created purely off of sentiment. That would be interesting. Well, I'm going to bet you that Donald Trump says something here at some point. So let's just see what it does. I think that for me, I'm done. I'm going to go ski. So I will see you guys on Monday. And on Monday, we can talk about what we want to do programming wise. I think maybe we'll have a vote on it and then start. Okay. So I'll see you guys then. In the meantime, stay excellent, team.